We could look at a couple stocks if you guys want. Tesla doesn't do, well, of course they do SEC filings. Everyone has to, but they do the investing letter a little bit differently. They don't really do press releases, I should say. So Tesla's a weird one because you have this cult of personality around Elon, which is well deserved in a lot of ways. He's like the best capitalist the world's ever had, arguably. Maybe the best technologist the world's ever had. I don't know. What do you guys think? Something like that. Let's see. So Tesla has around 30 in cash, 600 million market cap, 600 billion market cap. Yeah, so Tesla has like 23 billion in cash, basically immaterial compared to the market cap of 600 bill. I actually did update. Did they report Q2 yet? Does anybody know? Let's see. So if you haven't watched the Lex Fridman interview, I would strongly suggest that. Lex did his 5th interview with Elon. It was quite good. Wow, automotive down 7% year over year. Wow, let's look into that a little more. Model 3, Model Y production down 16%, 386. Just get all these numbers in the right places. 386,576. So that's the first production number below 400K in a while, but still quite a bit above. You know, it's still growing quite a bit. It still has grown quite a bit. Maybe I should put it that way. And there isn't a huge reason to be too scared yet, but it is a little worrisome. Oh, it's interesting. They're starting to disclose a little bit more maybe than I thought, which is great. Lithium refinery. Wow. Okay, financial statements. So I think the kitchen synced kind of like Q1. They had a huge regulatory credit quarter. We can adjust for that. A huge energy quarter from the old acquisition. Maybe that's finally starting to do well. So one of the things I like to look at for Tesla is just like automotive gross margins, because it's kind of the thing you look at for any traditional car maker. And I don't know if it's the company that it's the company needing to do like a product refresh or what, but it's certainly not negative. It's not that inspiring either. You would think they would be scaling up. That's the whole point of the Tesla growth story, at least on the car side. On the software side and on the robot side, those are kind of the call options, but they're expensive call options at a 600 billion market cap. It's hard to want to pay for that, right? So you can get Ford or some other auto company that's, maybe less efficient, maybe Toyota. Ford's market cap is 37 billion. GM is 45 billion. Toyota is a little more realistic. Maybe it's 257 billion. So, it's hard to compare Tesla to those companies because those companies kind of suck. But would you pay $100 billion market cap for like a poorly defined AI company? I don't think so. I think that's too expensive.
Hi, Martin. I was just wondering, do you know the recommended height of building to jump from to guaranteed death?
Yes, I do. Higher is better. But again, the market's calmed down quite a bit in the last 5-10 minutes I've been talking. Apple's down 5%, for example. Amazon's down 5%, not that much. Salesforce down 3%, Google's down 3%. These are pretty modest losses.
Yeah, this isn't too bad. But do you think this is just a precursor to...
We don't know. I mean, that's the beauty of markets. We don't know. If we knew, it would be easy. But I think it's important to sense frothiness, like went max short like 2 weeks ago, because this is going to sound really strange, but basically the Bitcoin strategic reserve was something I helped plan. And when news got leaked of it, the Bitcoin did not go up at all, which was really strange because I thought it was the most bullish news possible for Bitcoin, so that the US government would be buying it. That's kind of a big deal. And then it kind of like went up like 0.5% or something, and it was like that was what some traders called market tone. And the tone basically showed that everyone was already long Bitcoin, or like nobody felt like they wanted to add to their long based on that news. So in essence, you know, if all the market participants are long and they're all aware of some news that is supposed to be bullish and that they're not reacting, the only thing you could do there is sell everything in short. And basically that worked. But yeah, I mean, the SaaS stocks aren't down too much, for example. It's just NVIDIA, you know, some of the stocks that have been up arguably too much are cooling down a little bit. You know, this is not something to worry about. And I would put crypto in that category, right? Like crypto is by definition like a high beta imaginary asset. You can go to Pfizer and be like, all right, people still need their medicine, right? I'm not going to stop taking my cure for my rare disease because the S&P 500 is down. As long as I'm employed or I'm on Medicare, I'm still going to get my drug. And employment doesn't massively change even during terrible recessions. Drug companies, consumer product companies, these are kind of safe havens. And if you think people want to be in Bitcoin during a big recession or something like that, they don't, because you can't rely on the cash flows of Bitcoin like you can rely on the cash flows of Pfizer or Merck in a big recession. People are going to still take cancer drugs. They don't care about a recession. People are still going to take vaccines. Those babies don't care about a recession. They don't know what a recession's going on. You know, you just have to keep that in mind, that when markets decline, usually it's the weirdest assets that go first. And Bitcoin and crypto are weird assets. You know, you can sell all your Solana and all your Bitcoin and buy Pfizer or something like that. I'm not saying it's a good idea. I like Bitcoin. But just to explain the phenomenon, you know, it makes a lot of sense that a meme coin is not going to be the safe haven. It's the most fringe asset on the frontier curve. You know, it's the highest risk, highest reward. Things like Pfizer and Merck are boring. That's why people don't trade them as meme coins. They're really boring. But that boring nature is the dependable nature. They're literally the stalwarts because they're fortresses. Coca-Cola is another one. So what stocks are almost sold bargains today? I don't think of things that way. You know, I think of one, I mean, you have to look at the differential between these. If the market's discount rate goes from, I don't know, let's say, well, we actually know a little bit about what happened today on yields. So let's say yields, which is what's called the risk-free rate, right? RFR, goes from 4% to 3.7%. Let's just exaggerate a little bit. Okay. But the equity risk premium, which is the premium we pay to buy equities, let's say that goes from, I don't know, 2% to 4%. The market's discount rate, how much it discounts cash flow by implicitly, has net gone up, right? Let's say it's gone up from 6%, and I'm exaggerating a little bit here, to 7.7%. Well, that means that the cash flow of every single stock in America is down. The discounted cash flow value of every single stock in America is lower than it was yesterday. And you look across the stocks and okay, they're all down. And maybe it's not 6 to 7.7, it's 6 to 6.2. But every stock correspondingly, the cash flows from every future company are worth correspondingly less, then you don't really get a buying opportunity because the market says you should discount those cash flows more sternly. And at some point the market will say, no, discount those cash flows more liberally. But what really matters is, is one of these stocks going down way more than one of the others, and is that a mistake? Or vice versa. And I can't particularly tell you because, you know, you may think of things as, okay, stock goes down, bargain exists. Yes, in some ways that is true. If enough of it happens, there is some kind of like floor, but we're not anywhere near that kind of scenario where you can buy a stock for like 3 times earnings or something like that. So anyway, let's keep looking at Tesla because that's what was asked of me by my 𝗏𝗏𝗏 subscribers. 𝗏𝗏𝗏 is my alternative to Bloomberg. Please feel free to sign up. I haven't caught up with what like Tesla's actual plan is for expansion. Let me, it'll probably be in here somewhere. So let me glance at that too. I don't follow autos, or I mean, I should follow Tesla a little more closely because it really at this point is an AI company with an auto company attached. And even the auto side is quite a bit of AI. There's a funny video that I saw, and again, I like Elon a lot, but there's a funny video I saw of Elon promising self-driving cars every year for the last decade. And look, engineering is difficult. It takes time. Technology is often not ready, but it's a funny video if you haven't seen it. So yeah, I mean, gross margin for Tesla has been pretty low for the last year. It reached a peak of 29% when kind of revenue peaked as well. So we had that kind of super normal situation there. I don't know if his robots are fake. That's a big accusation. On the cash flow side, Tesla did 3.6 in cash flow, which is a pretty good number. CapEx, though, the free cash flow is pretty de minimis. And TTM free cash flow is 1.8, which on a 600 billion cap is a little crazy. 300 times earnings, no big deal. Right, so the market cap for the enterprise value is 584 billion. So 2 billion in free cash flow to support 584 billion is a lot, but I'm thinking that R&D line, it's amazing that R&D line isn't that big. I was gonna say you can chop that R&D line a little bit, but you'd maybe add another billion. It's not that much. It's a little tricky. Let's see, let's read through this a little. Energy storage records, that was the Solar City acquisition. Yeah, you never count Elon out, but you also shouldn't give huge market cap. And the fact that he wants to be in Waymo's business now, when he could have been in Waymo's business for a long time, it's kind of interesting, that the robotaxi side, because Cruise and Waymo have been around for a while. And I think maybe he's just been planning it. But now's the time to announce it. It's interesting they don't break out Cybertruck either. I don't know. I personally wouldn't buy it just because that's how I am. I'd probably buy Tesla. Let me take a look. I'd buy Tesla a little lower, maybe a lot lower. I don't know, at $100, it's probably a great buy. I'm not sure I'd buy it at this price unless there was material rebound in revenue. But if there's a material rebound in revenue, the price would be a lot higher. So it's pretty tricky. One of the things that concerns me is that, in most businesses, you don't have to look at free cash flow. But in this case, they have massive amount of CapEx. So looking at free cash flow is pretty important. I don't know, it's not that bad. It could be an okay buy here, actually. I think at 100, I would say it's a screaming buy. At 190, it's an okay buy. But you also have to assume the auto business comes back, Optimus works, Cybertruck grows, robotaxi works. Then you can get a pretty healthy return. And those things don't have to happen overnight. They could just happen relatively slowly. I'm trying to think of ways to estimate deliveries during the quarter. Wall Street seems to get that fairly right. Thanks, Lehan. Okay, let's look at the vehicle capacity side. So Tesla sort of put this narrative out there that vehicle capacity vehicle demand is basically infinite for their products. I don't think that's really necessarily true anymore. They certainly seem to deliver everything they make. Fairly impressive. So let's take a look at this. We continue to add to our vehicle lineup globally, including the introduction of the new Model 3 and Model Y trims and additional paint options for the 𝗥𝗘 lineup. After a sequential decline in production in Q2, we expect a sequential increase in production in Q3. Well, that's good. Refreshed Model 3 ramp continued successfully, including the introduction of Model 3 Performance in Q2 and long-range rear-wheel drive in July. We also continue to qualify more Model 3 trims for the IRA tax credit. Cyber production more than tripled sequentially and remains on track to achieve profitability by the end of the year. Well, that's interesting. So that might mean that Q2 earnings were suppressed because of Cybertruck, which is the kind of suppression you like, as well as Q1, which is the kind of suppression everyone would like. Expanding your business briefly requires some brief
brief losses. Yeah, I mean, it's probably around 100 times like actual earnings, which isn't so bad, given how Elon grows and the opportunity even in electric conversion and stuff like that. So it's probably not a bad buy. I would probably own a little bit of Tesla at the very least. It's heartening that the Tesla's market share is still quite low. Okay, so Model 3Y in Shanghai has gone from 750 to 950. Model Y 350 to 375 in Berlin. Model Y in Texas is the same. Cybertruck. Oh, that's weird. It used to say 300,000 for Cybertruck, but now it's, I guess, 125,000. Our company is currently between two major growth waves. The first one began with the global expansion of the 3Y platform, and we believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation vehicle platform. Yeah, I mean, if you believe in Elon, the stock's a pretty good buy here, but you always have to have a little bit of wiggle room. Okay, so new vehicles in first half 25, including more affordable vehicles. That's interesting. Yeah, I mean, I think it's still in Elon we trust. So yeah, I would be long.